Hey, what's going on guys? It's Henry back with another video, and in today's video I want to talk about rolling and how to protect one of your positions or how to save yourself from losing some money. So basically, since the market has been pulling down a lot and been falling, I have had some positions that have lost me some money, or should I say almost lost me some money, but I ended up rolling those positions, and two of those positions, and they are really big positions. I mean, ginormous. One of them is an $800,000 position and another one is a $280,000 position, and both these positions add up to being over $1 million. Yet, if you do the math, my portfolio is already invested in the S&P 500, 2,500 shares. So basically what I'm trying to get at is I'm using margin to sell puts, and this isn't the safest strategy, nor do I recommend using margin. I think you need a lot of experience for that. Preferably you're in my Discord for at least 6 months and you're profitable. But I do want to show you how I am rolling a position and how I turned a losing trade into a winning trade. And this is super important, especially for a small portfolio, a medium portfolio, or heck, even a large portfolio. It really helps to not lose money. And that's kind of the key to success, is in the long term, if you don't lose a lot of money on certain trades, then, well, you're going to be fine, right? Because you're going to win some trades, you're going to win big on some trades. And if you can minimize your losers, or ideally not even have any losers, then you're set up for a lot of success over the long haul and even over the short haul, right? You're going to make a ton of money. And basically, let me ask you this. If every trade that you made ended up being a winner, and then every trade that was a loser, you actually turn that loser into a break even, what would your profits look like? How would your results look like? And this is actually one of the biggest secrets to growing a small portfolio, because a lot of people out there, they're trying to grow a small portfolio, which is amazing, right? But one of the biggest issues is it doesn't take too much to really break down a small portfolio. If you just have a couple losses, then you can turn, 5K into like 2K, right? You can lose a lot of money. So rolling can save you from losing that money, right? So for example, let's go over the first stock that I ended up rolling, and this was a very interesting roll, and at one point it actually showed negative $30,000, or even more than negative $30,000. Now I was kind of panicking because yeah, I've experienced some losses just like everyone else has, right? I'm not immune to the market falling. However, I'm on 150% margin, actually 152%. If you do the math, I mean, this is about 800,000 position, this is 280, so that's 1,080,000. And then if I go into SPY, you'll see that here I have about something like $900,000. Yep, about $900,000. So I have about a $2 million investment, and even a little bit more than that because I do have some Apple shares. These Apple shares right here, let's see how much I have in equity, 57K. So I mean, still a lot of money, right? That is probably the size of most people's portfolios out there. But obviously I've been doing this for like 9 years, so that's why I have a large portfolio. It took me a lot of time to definitely get to this point. But anyways, if you'll notice, I have about a $2 million worth of investments, yet my portfolio size is only $1.4 million. So I'm basically borrowing around 50%. I do have some other positions like Oatly and XLY, selling American Airlines puts. We were really successful in this, by the way, in the Discord. But anyways, what I'm doing is I'm borrowing money and I cannot lose my money. And that means that you probably also can't lose your money, even if you're not using margin. Again, I'm not recommending margin. I think that is a thing that you do when you're super advanced, you're part of a community, and you have some guidance at least. Doing it yourself can get really, really risky. By the way, you can always schedule a free call by clicking that first link in the description to join the Option Coaching Academy. But essentially, what I want to do is I want to protect myself from ever losing money. So let's go into SPY. SPY right here, I currently have the 397 put. So if I go into my history, you can see that this isn't just a put sell. I didn't just go ahead and sell puts. This is actually a short put roll. Now what this means, and the reason why it says this, is because I previously had a position that didn't really go well. And let me show you what that looks like. So previously you can see here that on 6/10, which is on June 10th, I had the 408 put. Okay, now obviously SPY has gone down a lot. If I go down to the 1 month, this is actually the option view itself, but I have to go back to the stock view. So let me go back to the stock view. Let's quickly look at what happened for 3 months. So for 3 months, this thing is down 13.57%, and I sold a 408 put. So clearly it went below 408, and I would have had to buy a whole lot of contracts. Let's see how many contracts. I would have to buy 20 contracts. So again, 20 contracts times the $400 would be 800 grand. And as you guys can see, I do not have 800 grand in my account. So I need to do something to basically protect myself from losing all of this money. Or, of course I can use margin to get put 800 grand worth of stock, but you know what? There's an interest rate to that. And I do not want to pay interest on $800,000 of loaned money. money. So the secret to not having to pay interest is by rolling that position. And basically you can keep rolling until you become profitable. So let me go back into this 397 put option. Let me show you how I protected myself and basically got myself out of a really bad situation. I mean, I was in a complete pickle. It was like that OMG moment. I don't know, you guys probably experienced that at one point in your life. You're like, OMG, is my life over? Or are things about to get really, really bad? What do I do? And you got to think really hard and critically on how to get out of that situation. But luckily with option trading, you don't have to be super quick. You can just think it through. And the best thing that you can do is roll down. So it's called rolling down. But actually what I did was I rolled down and out. So for example, let me go back here. I had a 408 put. Okay, this was expiring on 6/10 on June 10th. So what I did was I bought back 20 of the contracts. Okay, now that would be super expensive because 20 contracts times $16 would be what, like $32,000. So like I said, I was down over $30,000. So this would be a $32,000. In fact, it might be even a little bit more than $32,000 because of this 34 cents here. So it was probably like $32,680. So I had a big hole in my pocket. Now, if I were just to buy this back, that hole would be permanently burnt. Like my wallet that got stolen when I was traveling, okay? That wallet was gone. I never got it back. Unfortunately, I had to get all those credit cards back and order them to Europe, right? But what you can do to actually kind of get your wallet back or get your money back, right? So let's say you have a hole that's burnt in your pocket. That wallet just fell through the cracks and someone found it. Well, what if I told you that you could basically have like a line, like a rope attached to your wallet? So when someone was trying to take your wallet or when it just fell out, you would have felt it like dragging on the ground, or you would have felt a tug. Basically, all I'm saying is there's like a safety net to protecting yourself from losing your wallet. And in option trading, the way you don't lose your wallet and you don't burn your cash is by rolling. So these 20 contracts right here, I bought them back. The 408 was the strike and the date was 6/10. Then what I did was, you can see here that I closed, but then I actually opened simultaneously. You can see right here that was like 12:06 p.m. and then I opened another 20 contracts by selling them also at 12:06 p.m. on June 10th. Now in this situation though, I went down. So you can see I went from 408 to 397. If you do the math there, that's $11. Might not seem like a lot, but $11, since each option is 100 shares, $11 is actually $1,100. And because this is 20 contracts, I ended up saving about $11 times 20, which is $220, times 100, which is $22,000 in collateral. So I'm going down by $22,000. I have saved myself $22,000. And guess how much? You already know this. You can already see on my screen. Guess how much I had to pay to save $22,000? I paid $1,000 to save $22,000. This is called a roll. This is rolling down. And Robinhood and many other brokers out there, right? I like Robinhood because it's super simple. I've been using it for a long time, so it is kind of hard for me to transition. But you can use this on any broker out there, even if you're in Canada, right? There's Questrade, there's other brokers out in Canada, but it doesn't really matter. Whatever brokerage you have, and by the way, you don't even have to have this button. For example, you don't have to have a roll button in your brokerage. You can just close it out and then as soon as possible, open up a new position manually in 2 trades. But Robinhood allows you to do it in 1 trade, which is amazing. Okay, so this is the button where you would do it at. Okay, it says roll this position. Now, quickly, just to recap, I went from 6:10 to 7:15. So, you know, I had to wait a little bit more. This is about a 5-week period. Okay, a little bit less than 5 weeks. So I had to roll out 5 weeks and then I rolled down, which is a benefit to me by $22,000. So I actually ended up saving $21,000 because I'm saving 22K, but I paid $1,000. So ended up saving $21,000 for about 5 weeks. So $21,000 for 5 weeks, that's like $4,000 a month. Okay, amazing. Obviously I have a larger portfolio, but even if you have a smaller portfolio, just apply the same principles to a small position. You could sell a Palantir put option for $8.50. And if it goes down to $8, you can roll it from $8.50 down to $8. There you go. You would save $50. So when you click roll this position, all right, it is going to give me the opportunity to take my current position of 397. And right now, SPY is lower than 397. So for example, let's say that, you know, I'm bearish or I'm afraid or whatever. I just want to roll down again. I can roll to a future date. So my current expiration date is June 15. And I can roll out to, let's say, another 30 days or even less than 30 days. It doesn't matter. I can go for less than 30 days. So August 12th. Okay. So I'm going to go for August 12th. This is less than 30 days out. Now I'm going to show you a couple different scenarios. Okay. So if I went from 397 and I actually just kept it at, well, there is no 397 for some reason, but if I rolled it down to 396, you can actually see here that I would collect $6,980. Literally nothing has changed. In fact, a little bit has changed. I'm actually benefiting myself down by $1, but really not much has changed. Let's just pretend this is basically the same strike. But because I'm going out in terms of expiration dates, right? So I'm going from July 15 to August August 12th, because I'm going out about 30 days, actually like 28 or 27 days, actually 28 days, it says right there, I'm actually gonna collect a credit. This is really important. I'm actually collecting a credit and I'm basically doing nothing. This whole premium is actually coming from time value. This is all coming because, you know, options have theta, which is time decay. And because I'm going out for an extra 28 days, there's inherently a little bit more risk because it's 20 days out. So because it's 28 days out, I'm getting paid, I'm getting compensated about $7,000 for going out. But wait, you don't actually have to pick the same strike. You can go down as I just showed you. So let's just say that, you know, you don't know if SPY is going to go up or whatever stock is going to go up, right? Let's say you think it can pretty much stay the same or whatever. You think you can go up, but maybe it's not going to go up to the 397 mark. You can go down, as you can see by the premium. Even if I go down to 390 right here, I can again buy myself $7. You can see from 397 to 390, I'm buying myself $7. 20 contracts of this is $14,000. So I'm basically saving $14,000 by rolling this option, and it's not a big amount of money. I'm getting a net credit of $9, which is 180 bucks, but basically I'm getting paid to save money. So I'm getting paid $180 to save $14,000. So this is a win-win. This is how you would roll a losing position. So you can continuously roll on a monthly basis or even on a weekly or every 2-week basis. You can continuously roll down and down and down, and eventually you're going to roll down enough to the point where that stock is going to be higher than your put price. Okay, so eventually you can actually never lose money by continuously rolling, and this especially works on very, very safe stocks like SPY. Now I do want to show you exactly what I did as well on XLY. So XLY is another position that I had that I was down a lot of money on, and it's the same situation as SPY. So I want to show you this exact example as well, so you get a better understanding. You can actually master rolling options, because I think this is the most important skill that you can literally have in option trading for at least managing your risk. Okay, there's more important things like how to enter a stock, which strategy to use, technical analysis, but for managing a position and most importantly, managing your risk and not losing money, because I've talked to so many people in Discord who before them joining the Discord, they're down like tens of thousands of dollars, or, you know, I've seen people down even more than that, right? Or even a few $1,000s. That is still sad to see, because your hard-earned money is important. You do not want to lose it. And as Warren Buffett says, rule number 1, don't lose money. And rule number 2 is to look at rule number 1. So basically, you really don't want to lose money. And just to paint the picture, okay, I'm going to paint the picture of why it's so bad to lose money. Imagine this. So let's say you have $100, you invested $100, okay? You did something really risky, it didn't work out, and you're down 50%, okay? So, you know, how much would you have? You're probably saying, I would have $50. Exactly. So you went from 100 to 50, you're down 50%. But check this out. To go from $50 to $100, it's not a 50% gain. It is now a double on your money. You actually have to double $50 to get back to your original $100. And that's why it is so detrimental to your long-term success. It is so bad when you're losing money, because losing money is way worse than just staying even or breaking even, right? Or obviously breaking out a small profit. But when you lose money, that is going to be much more difficult to make back. So you want to protect yourself at all costs against losing money in your portfolio. So that's basically what I'm always trying to do in terms of risk management. And really good risk management means that yes, you can lose money sometimes, but your winners far outweigh your losers. And when you do lose, that loss is very minimal. Okay, so I had XLY, I sold the put option, and as you'll see right here, it also says short put roll. So if I open up XLY, see right here that I actually bought back same date, right? It was the same date, it was 2 minutes later. I bought back the 150 put. The 150 put was way in the money. I would have to pay about $10,000 to buy it all back, but instead, you know, obviously I bought it back and then I rolled it. So I actually ended up selling 20 contracts to replace the 20 that I previously had, but now I went down to 141. So I actually saved $9 times 20 contracts, which is a whole lot of money. So I just had to do the math, and that's about an $18,000 worth of savings. So I actually saved $18,000 in 1 month, and this position is nowhere near as big as SPY position, but I still ended up saving $18,000, and you can already see on the screen, I had to pay $320 to save $18,000. So this is literally why rolling options is one of the most important skills that you can have. This is something that I focus very heavily on in the Option Coaching Academy, because you can have as many gains as you want, but one loser can weigh out all of your gainers, and you really want to protect against having a one big loser that's going to drag down down your portfolio. And that's actually what separates a really profitable trader from a trader that sees, you know, profits, but then ends up having a big loss. And then when he looks at his balance sheet and profit and loss statement, it's actually not that much money. He's like, well, I can't really make a full-time living here. And that's because you're not managing your risk correctly. So this is some insight on how you roll options. If you want to learn more about rolling options and work with me hands-on, then you can check out that first link in the description, and I will see you in the next video. Make sure that you keep watching some more videos in my option playlist to master your option trading.